Welcome back to the channel, guys. I hope you have an amazing day from wherever you are around this globe, whether you're in winter in the southern hemisphere or lapping up the sunshine in this beautiful northern hemisphere at this time of year. All right, I've got a big video for you guys today after the interest rate rises. Let's talk about that, and I want to get into a little bit of a macro view as well as the cryptocurrency trading. The setups that I'm seeing now, we've got some short side potentials, some nice high probability with very low risk. We'll look at that, and of course I want to get into the macro picture as well. So do those little intro things if you could. Likes and subscribes. 10% of you said we're going to hit that like button, and my crystal ball was right. If you're looking for those juicy sign up bonuses and of course a fantastic trading platform that has leverage and spot trading, plus you can earn interest on your cryptos, go no further than Bybit. The app, the phone app, is also fantastic as well. There's up to $4,450 of sign-up bonuses using the links in the top of the video description. Plus, for the Aussies, this is my go-to for spot trading and my fiat on-ramp. Obviously, there is SwiftX, so check out that link down below. It's 10 bucks of free Bitcoin using that when you sign up. And of course, the New Zealand friends can also do it. And coming soon, for my UK and Canadian viewers, good news here from SwiftX as well. So I've seen these guys, met these guys. They are in Brisbane, my home state, back home. And if you want to learn more about trading and investing as a part-time trader or full-time investor, check out the Investor Accelerator, link in the top of the video description. Now all you got to do is go across to here, free investor newsletter, subscribe to that, drop your email addresses, and you'll receive an email with a $100 discount code for TIA Premium. So that's got your full courses over 20 hours. Plus there has been fantastic reviews on our most recent mini lesson on how to trade. Michael has done up a fantastic course on trading, how you can set up your own plan. So definitely go ahead and do that. Drop your first name, email, and you'll get that discount code to get into TIA Premium. Let's dive into the news today. Obviously the biggest thing is the Fed has raised interest rates by 0.75%. This was not a shock to anyone, and basically the long story, the big hype here, every news outlet is covering this, everything to do with the interest rate rises. The big news out of this is it was not a shock to anyone, therefore the market's pumped. That's basically your 30-second bite-sized piece of what has happened. No one was shocked about this, therefore markets has pumped. So if you're trying to figure out why is this all happening on bad news, no one was shocked by this, or at least the smart money wasn't shocked by this. They front ran it, and you can see that on the hourly chart with the trend increasing as we're coming into that news event, and then the market basically just pumps from that point. So that's what has gone on over the last 24 hours. The key critical thing here now is for Bitcoin to remain above these levels like we looked at, 22,500, and the next level that has just been printed was the peak from today's bar. So we've got about 14 hours to go for the close. That peak is now at 23,455. Where does that come from? We look left, all right? We look left of the chart, look at our horizontal line. The market closed here at the peak on July 19th. July 20th had our reversal bar, and now we're seeing another peak at this level here. So we need to get above that level over the next 1 to 2 days just to get that strength on for this next move to test around the 24.5 up to about $25,000. Yesterday we were looking at this as a potential move to the upside. The thing we didn't want to see was the market break down and get closes lower, okay? That was pretty much what I was expecting not to happen based on what we're expecting with the interest rate announcement. So we were looking at it to be around that 0.75, maybe it was going to be a little bit higher at 1%, but like we talked about yesterday, what is happening at the moment is what the smart money is expecting. And so even though it sounds like bad news to the retail investor who thinks there's a recession coming, and even if there is a recession, then they think the worst happens after that point, after the announcement of a recession, those guys are unfortunately going to get swallowed up and basically rammed up the backside yet again as retail investors because they're not front reading what is going on at this point in time. People tend to focus a hell of a lot on the small short-term pictures, but the macro here is really telling us that we are in a bigger play for a more macro picture over the next several years of solid upside moves. The way this is going to play out, of course, in my opinion here, is that we're going to get past all of this interest rate fears. We're going to get past the inflation stuff. Call me a fool. I know I see it in the comments every now and then. People say, how can you don't know what's going on. There's all of this bad stuff going on. Go and follow one of those channels who just tell you about the bad news. That is essentially what those guys are getting lapped up time and time again. They're getting destroyed, and they'll get destroyed again. What is going on is we're going to find our way out of this, and then before you know it, we're going to be at higher prices, and then the market continues up with the bullish macro picture. Now, here's my little rant for the piece of the video. I've been traveling now for the entirety of this summer, basically from July, the last month, but looking at things from June. I'm here for August, I'm overseas for September. I've gone around to multiple cities in Italy. Obviously, I've traveled through from Australia to the Middle East. I'm in Greece now, I'm going to Turkey, and then back home through Southeast Asia. I post on my Instagram, another little shill there, Instagram and Twitter are down below if you want the official links. No one is in recession, and even if the word recession comes up in the news, the majority of those people are probably sitting at home on their computers or their basements, whatever, and just worried about this whole recession where they're needing to prep and stockpile for the worst that's going to come. Yes, this is the summertime, and we'll probably see some sort of drop or some downside fear come in the winter for the Northern Hemisphere, remember? But overall, we're in a macro up picture, and if this was supposed to be some sort of recession coming up, I'm not seeing it across Australia, Southeast Asia, Middle East, Europe, and for you guys in the US, I'm sure you're not seeing it as well in many of those cities, which I hear from you guys. There is no bad economic crap going on at the moment. The economy has bounced out. Sure, it's on the back of a lot of money printing, but I mean, look, take a look around the world. Things are still going well. Hear me out. The time will come where things will get very bad. The time will definitely come for that, but I don't think it is right now, and I'm definitely not seeing the signs of it as I travel around the world. So that's my little rant for this video. That is a more macro picture, which is what gives me confidence to invest for the longer haul, for macro stuff like Bitcoin, for macro stuff like real estate, or more importantly, the land value for the longer term picture. So that's my talk about the economy, which is why I'm interested in still investing while I'm still have confidence in the market. Let's have a look at what's going on for this trap that we see for Bitcoin. So this 4-hour trap, you can see this big pump that we had on the news. Big move to the upside. What usually happens after these upside moves, it just happens so quickly on such big volume and then they stop suddenly. Generally, we see a little bit of a reversal and just a fill-in of this bar just to see whether it was actually a strong move to the upside. Of course, we want to see closes above 22,500 at this point because that's the 50%, but we've seen this sort of trap before. Look back here on the 1st of July, big pump up, and then the market retraced all the way back down. Now you see it even better on a 1-hour chart. So let's throw that up. And we looked at this specifically on the channel as a potential trade, or if people were trading, where I would look to put my stop losses on here because of the trap to these big moves to the upside. And so what I would do then is just trail the low of the bars or candles, if you've got it on candles, and just see where that bar low is crossed. And then that's basically the profits to the what we've made to the upside. Profits are taken then because I think, well, you get that lower downside because the market has to come back and retrace basically that pump move. What you want to see next is, of course, the market hold up above that low and then start to work its way higher. And that, like you can see here, like we're seeing this trap before, it could take several days. So basically the trap is getting caught up in the peak after the back of the bullish news, in this case, seemed bearish, but the result on the market was a pump, so the bulls won in the end. Getting caught up at the top, waiting for that next move, and then you get the retrace just to see the market then push on a few days later to the upside again. So that's the trap that we've seen before, even recently within the last 4 weeks here for Bitcoin. So try not to get caught out with that this time round. The bullish upside, we hold above this 22, at the worst case, I think around 21,700, because we've been following this level for so long. It's been very, very important to the market. And then work our way higher with these higher lows. But it can take a little bit of time, especially after such a quick move to the upside already. As for Ethereum, this is the low risk, high reward trade that I talked about in the intro. Just taking a look at the top. So you can see we've got a bit of a double top here, low risk, high reward. Now what I'm going to use is this tool here, look at the top to the bottom. Ethereum has come back pretty well considering other markets like Matic and Bitcoin. We'll have a look at Matic in a sec. But for Ethereum, top to top, we've got a lower close, maybe this was the pump, maybe we come back down. Obviously, Bitcoin would have to also fall as well for this to play out. So Bitcoin would need some time off from its peak at 23,400 at this point, and then I'll be looking to take some profits off the table around 1400, around 1450, 1400, because these are the levels that are coming out here, and then potentially all the way down to about 1280 or 1300. So what does that mean in terms of percentages? Well, to this first little area here of potential resistors. Remember, in trading, nothing is guaranteed. That's why we always have stops in play just in case we are wrong. The market essentially just goes the other way. 14% to the downside here, then to the 1400 level, about 16, and then all the way down to this, to the next level, the profit target level, about 1280 to 13. So it's about 23%. So the reward is quite reasonable to the downside, and the risk would then be above the stops. So the lower the bar to the higher the bar is about 4.8%, so about 5%. So the returns there look much better. You got a 1 to a 4. So 1 being 5%, to the downside you got about 20%. So it's a 1 to 4 risk ratio. Yes, there is the possibility of being wrong, and that is a straight out loss. The market reverses, goes above, breaks its resistance at 1670 and moves above 1700. That's the risk. But in this case, we got a double top, and often double tops can at least come back down and retrace some of this move. Now, have to have some idea of where the confirmation of the entry is. You just don't jump into the market willy-nilly. Have to have in your plan what confirms this as a pattern to the downside. So definitely have that in your plans as well. But at least there's a little double top playing out here on the daily chart. As for Matic, a little weaker on the bounce here. Sure, the percentage move up has been greater than ETH, but in terms of where the peak has come out at this point in time, it's much lower than that previous top on the 18th. So in terms of the pattern, a little bit weaker than ETH, but at least we've got that nice bounce at 75. Overall, of course, is going to depend on Bitcoin as well, but if we do see that downside, then I think we'll come back and test between that 65 and 75, which is exactly what we've been looking at since the top came in. It lines up very well with those previous tops, and of course, the other tops here at 75. So maybe another level of support before Matic can accumulate and then move higher again. Short-term crypto trades are setting up, but don't get caught out in that Bitcoin trap. And as for the macro picture, I know I talk about it quite a lot, so make sure you are subscribed and like the content so you can see it pop up in your news feed. There is nothing that bad that is going on out there. The fear comes from the media, for one, because they need the clicks. You see it in the titles here on YouTube. You see it in the thumbnails. Those things work better. That's why people use them. It is annoying at times, but that's why people use them, because they work better. The media's been doing it for years. So the fear is out there, but the smart money is showing us the facts that they are not scared of what's coming up in the next 6 to 12 months. Maybe there's some further downside, but it's not going to be anything crazy like a GFC, which is how the media is trying to paint it. My opinion, that's exactly how I'm trading. If you want to learn more about that, go and put your email address in the Investor Accelerator free newsletter here and get your $100 off the TIA Premium, where you join us on a weekly basis. We go through weekly live calls over there, plenty of question and answers as well from you guys, and tons of courses. So check it out. I'll see you guys at the next video. Bybit, SwiftX, links down below for your bonuses. Like and subscribe. I know it's all of that YouTube stuff. Catch you next video or on Instagram and Twitter. Till then, peace out.